Good morning, all. Still a little sick, as you guys can see. Just wearing this hoodie and trying to get through this. It is Friday, September 15th. We do have the quad witch today. So we have OPEX, quarterly OPEX, which expires futures and options alike. There is a massive amount of expiration today, which generally brings kind of a sideways choppy market. I would say that these are days that a lot of newer traders should not trade. Just in general, I know a lot of traders are probably not going to be active. A lot of day traders aren't going to be active on today's session. So just keep that in mind. You might want to start the weekend earlier if you are a newer or just don't really want to trade this event. I'm going to be trading smaller size, even a smaller contract today. So just talking about that. And by the end of today, we'll set up a plan that will break down here for the next potential move in this market and where I could see this going. But first, we do have some news, right? We have oil prices, commodities that we've been screaming from the rooftop. Oil is expected to do well over the next few months, right? Oil has crossed $90 a barrel for the first time since November 2022, sending ripples through many parts of the economy, right? There are a variety of reasons for the upward climb, most notably the recent production cuts by Saudi Arabia and Russia, but the pace at which oil is ascending has become a bigger topic of discussion after remaining below $80 per barrel for most of the year. So WTI has broken that level in the summer and has soared 17% over the past 3 weeks alone, helping raise costs on everything from transportation to manufacturing. So resurgent energy prices are a particular headache for the Federal Reserve, which was recently celebrating some wins on the inflation front. And in fact, U.S. consumer prices in August rose by their most in more than a year, driven by nearly 11% increase in retail gasoline prices. A weakened Chinese economy was also thought to sap global oil demand, but supply appears to be a bigger problem, with oil and gas companies quick to point out the regulatory restrictions in their sector. Whilst While releases from the Strategic Petroleum Reserve were commonplace in 2022 when Russia began its invasion of Ukraine, those drawdowns have brought SPR supplies to their worst levels in 40 years. So, if WTI crude would top $100 a barrel, the Biden administration would likely consider additional releases. But until then, there are some other options under consideration. Regular discussions are also taking place with domestic products and refineries, as well as international options like easing restrictions on exports from Iran and Venezuela. So this is in part a large factor that has to do with the overall increase in CPI and inflation that we've seen most recently, right, is one of the things that we do have to consider overall. And there's still upside pressure on this, right? Demand is still high, and I think that there's still some ways to go for the next few quarters even. So that could put a lot of commodities on the upside as well, right? We've seen that steel and whatnot. A lot of energy companies and prices have increased, and I think those are pretty good medium-term holds for the coming few quarters. We also have news about the strike that we talked about yesterday, right? The United Auto Workers have gone on strike against the Detroit Three, right? We have GM, Ford, and Stellantis, right? After employees' 4-year contracts with the companies expired at midnight, and around 13,000 auto workers went on strike at 3 factories owned by GM, Ford, and Stellantis. So, marking the first time ever that the simultaneous strike has appeared. The walkouts will halt production of popular vehicle models, including the Ford Bronco, Jeep Wrangler, GMC Canyon, sending shares of the Detroit Three into the red before the bell. So downside pressure on that. And we talked about billions of dollars of losses from this strike should it go on for, I believe, 10 days, which can put some downside pressure in the overall economy and the market. We've seen the market kind of turning on today's session, but I don't necessarily believe it's just because of that, right? There are other factors that we'll talk about as well, right, as we're leading into the OPEX, which is more of a volatile period. So that's going to be interesting to watch. We'll see how that kind of resolves itself or what happens in the next coming days. But there's a lot of downside pressure, and analysts expect the companies and the UAW to meet in the middle somewhere, but warn that the latest spectacle of angry employees and frustrated executives provides a solid reason to avoid the Detroit industry right now. Another thing is, right, the average seeking salary is around 300,000 US dollars for employees, which is outrageous for a 4-day work week. So keep that in mind. How in the middle are they going to meet? We'll see. We also have IPO, right? ARM Holdings yesterday, another chip company, popped off the open, right? Nearly 25% on Thursday of a gain, reaching a valuation of nearly $68 billion in a stellar trading debut that reignited the IPO market hopes, right? ARM, a majority owned by SoftBank, sold more than 95.5 million shares in its biggest initial public offering of the year. So while SoftBank CEO Masayoshi Son said he intends to maintain his 90% stake as long as possible. Not everyone is confident, but investing group leader Stone Fox Capital warned that living up to lofty expectations following a hot IPO is nearly impossible, drawing comparisons to Rivian, $12 billion IPO, and over 80% decline in the stock price since its debut. I don't necessarily think this is another Rivian. ARM has already IPO'd in 98. Right, ARM is used in pretty much everything. It's not. I don't think it's comparable to Rivian. I think that's insane. Honestly, I think there's a lot of potential there. I just needed to see it settle down, report some earnings, right, and have more of a concrete valuation as we go on. As we're in a period of high valuations in stocks, we're a little rough around the edges right now. A lot of things have risen, and we're in kind of fickle territory. But I think that the true colors will show for ARM in a few months per se. But I think longer term, it has really, really good potential if it's going to compete with other chip makers. And if ARM is using everything, right, it has some value, it has some quality there. Now, talking about the overall what the hell, weird comments. Talk about the overall market, the S&P 500 here. What we have is we hit the top of the distribution at 4560, right? Those 4560s at the top of the distribution. Right now, we're selling off them. It's not necessarily a surprise, realistically. I think that's going to be a huge barrier to really, really attempt to break out for the bulls. I think it's going to be difficult for them. We have OPEX today. I think there's going to be a lot of sideways chop and volatility. So tread very, very lightly. I'm going to be trading very small size on today's session. But realistically, I think that they try to sell from those 60s. And we'll see what happens at that 45, 42. And we could just get pinned in that area. If we manage to close above that 60, I think that next week there's going to be a strong bullish move above that 4,600. So we'll see. A lot of people are warning about sell. I think that we're a little premature if it doesn't come today, which again, it's on OPEX where there's going to be a lot of money expiring, billions of dollars. I think that next week we have to tread lightly in that regard. So what we're going to do is open up our live trading room. We're going to do this live in front of you guys again, and I'll see you guys in there. Check out our free futures trading course. It's on our website, tradeproacademy.com. Have a great weekend, and we'll see you guys next week. Thanks, guys, and we'll chat soon.